What's up, everybody? Nate here. So big changes are currently happening right now in the housing market. Just a few weeks ago, the Federal Reserve announced that it was going to start raising its benchmark interest rates, and immediately the United States was going to see a 0.25% rate hike. With interest rates going up in the United States, that means demand for mortgages is naturally starting to come down. And recently, the average 30-year fixed mortgage rate was around 5%. That's the highest we've seen in the housing market in over 2 years. And with prices in the housing market also reaching new record highs just about every single month, a lot of buyers are naturally exiting the market. They simply can't afford houses anymore, as right now is one of the worst times for home affordability in the United States since all the way back in 2007. That has caused some sellers all throughout the country to lower the asking price of their home so that way they can start selling their house again. But so far, it hasn't been enough, as inventory is still setting a new record low all throughout the country. But with all of that happening right now, the housing market is still red hot, and it's entering a traditionally hot season in the United States. Springtime and summer is the hottest time for the housing market in the US. This is the time when housing prices go up, and usually inventory starts to rise too. But with nobody really able to afford a home right now, what exactly is going to happen with the housing market next? Well, for the average seller and buyers, there is a big problem coming to the housing market in 2022. And today we're going to talk about what that is and everything that could be happening next in the housing market this year. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now let's talk all about the housing market, what's going on right now, and what could be coming in the future. Alright, so we've talked about the housing market a lot on this channel, and that's because the housing market is vitally important to everyday Americans and investors. Everyday Americans need a place to live, and over the past 2 years, a house was something that a lot of Americans could finally afford. That's because interest rates were super low and stimulus was very high in the United States. Because of the pandemic, the United States government wanted Americans to spend, so they asked the Federal Reserve to print a ton of money, and the Fed kind of forgot how to turn the money printer off. Come on, Jerome! Keep printing money! This was a big opportunity for a lot of Americans because now they could get into a house at record low rates. In my area, interest rates went down to around 2 to 3%. This is massive savings for a lot of Americans compared to interest rates that are just 1 to 2% higher. I mean, you're saving hundreds of thousands of dollars over the lifetime of your loan with an interest rate that is just 1% lower. Now imagine if it's 2 and even 3% lower than usual. But now in 2022, all of that stimulus and interest rates are starting to rise. That's making it really difficult for everyday average Americans to get into a home. A new study was recently conducted that showed that housing affordability is at its lowest point for many Americans since 2007. And this is all because so many different Americans bought so many houses in 2020 and in 2021. There's just not enough houses and demand to sell your house in the United States. I mean, sure, there's demand to buy a house, but sellers don't want to put their house on the market right now. And there are two major reasons for this. Reason number one is equity. Americans in the United States that own a home own more of their home than they ever have in American history. And that all comes down to equity. Equity is simply just the difference between what you owe on your mortgage and what you've already paid off. Because the housing market has been red hot over the last 2 years, Americans who bought homes in 2020 and the early parts of 2021 got a really good deal for their house because housing prices and demand hadn't fully exploded yet. So they were able to get in at a great interest rate and a low price point for their home. But because of the homes in the surrounding area that have been selling, their home, even though they're not selling it right now, is gaining value. That means if those sellers were to go sell their house right now, the equity they have in their home is massive because their home is a lot more valuable than what they bought it for. Meaning they're going to be able to sell and make a massive profit in that house. And that's all well and good good, but the issue with that ideology right away is that if a seller goes to sell their house, then they have to live somewhere. That means they re-enter the market and they have to buy a new house or rent an apartment, but renting and buying a new home right now is extremely expensive. So any amount that they make off of selling their previous home might get completely eaten up because housing prices are going way up and interest rates are rising too. Remember what I said before about interest rates going down to nearly 0%? Oh, that meant that buyers could now save hundreds of dollars every month on their mortgage payments. But with interest rates starting to go up, you're now going to recoup those costs. So sellers want to kind of avoid this situation. And they want to stay in their home because they have so much equity. Potentially, they're still making mortgage payments, but if the market continues to rise even just slightly, then they're going to make a killing on their house if they go to sell it, even if that's 5 or 10 years down the road. But the other reason that sellers aren't putting their house on the market in mass right now is because of what exactly is happening right now in the housing market. So I mentioned before that home buyer demand is dropping all throughout the United States. Americans can't afford these crazy high interest rates on mortgages, and they can't afford the housing prices as they are. What this means is that you're going to see a slight drop in housing prices throughout the United States, at least at first. Sellers that want to put their house on the market want to sell their house, but they can't just put it up for whatever they want to. Say, for instance, you put your house on the market for $100,000. That's the asking price, but if nobody's willing to buy it at that price, then the house isn't valued at that. If you drop your price down to say $95,000 or $90,000 and then you have a ton of buyers interested, then that is the true value of your home. And that's what we're starting to see in some areas throughout the country right now. Sellers are having to decrease the price of their home slightly in order to attract more buyers. But this is a really slippery slope for a lot of sellers because you got to think, Americans, when they go to sell their house, want to make a profit. That's why we had so many people in the early parts of 2020 and 2021 put their house on the market right away. They could get a huge profit for their home. But we're starting to see prices slightly come down because buyer affordability is incredibly low. So if sellers are putting their house on the market and they're decreasing the value exponentially, well, now they're essentially losing money on their house. Sellers don't want to lose money on their house, so they refuse. They want to stay in that house and build equity, even if that equity is now growing slowly because the housing market is slowing down. This essentially puts a lot of homeowners underwater because if you bought your house at $80,000 and you list it for $100,000, but nobody is interested in buying it at that price, then you have to lower it back down to maybe $90,000 or even $80,000 again. You're now selling your home for exactly what you bought it for, which might seem like a pretty decent deal. You got a home for a few years and you made the exact same amount that you paid for it, but here's the problem. Inflation in the housing market and the stock market and consumer prices all throughout the country is going up. That means that $80,000 that you paid for your house just a few years ago is not worth $80,000 anymore. And asking prices are not getting cut that dramatically right now, but it's starting to happen throughout the United States, and we are just starting to raise interest rates. So sellers don't want to lose money on their homes, so that's leading to a bunch of potential sellers not even listing their homes on the market anymore. And I want to be clear here, inventory is decreasing in the United States, but so is buyer demand. What you got to understand though is buyer demand is crazy high right now. Buyers see that interest rates are starting to go up, so they're scared. They have that FOMO, fear of missing out, that they're not going to be able to get a home if they don't get one right now. Houses are already very unaffordable for many Americans, so a lot of Americans are pushing their budgets to the very edge in order to get a home because they're afraid if interest rates continue to go up and inflation continues to go up, then they're never going to be able to afford one. That has meant that housing prices have continued to skyrocket in 2022, and they're most likely going to continue that way for the next few months. Like I said, the spring and summer months are traditionally hot in the United States. It's a lot easier to buy a home when it's warm out than when it's cold, and that's simply why things are hotter during that time. I mean, I'm not alone here. Nobody wants to move a sofa in the snow, right? Eventually, you're going to have an equilibrium. More houses are starting to be built, even though supply chain issues are still very much stretched in the United United States, but they are slightly improving every single month. And with fewer and fewer buyers exiting the market, there's going to be a lot more homes than there is buyers at some point. This is going to be a very slow process though, because when I say that inventory is historically low, I mean it. And when I say that buyer demand is at a record high, I mean it. It's gonna take a while, but you gotta think, if this is all going on, then how exactly is the housing market still extremely hot right now? Well, one of the biggest reasons why the housing market is still red hot in the United States is all because of real estate investors and real estate investment firms. Everyday average Americans were jumping on the chance to finally buy a home in 2020 and in 2021, but wealthy Americans saw this as an opportunity as well, an opportunity to build their wealth even more and gain passive income. Big real estate firms, though, have been buying up a large portion of homes in the United States, and what they're doing is kind of flipping these homes and then renting them out. Big real estate firms have been buying up homes in the United States a little bit faster than they have in the past, and there's a few different reasons for this. For one, real estate investment firms can get a mortgage for a home at a much lower interest rate. This is because they have a lot of capital and a lot of wealth built behind them. I mean, real estate investment firms are worth billions of dollars. That means they have a lot of assets. That's a less risky situation for the bank. They can see that this billion-dollar company is going to be able to pay back its loan, and if it can't, it has a lot of other things that it can sell off in order to pay them. The average American simply doesn't have that, as most American net worths are not nearly high enough, which means that it's a much riskier play for a bank to give you a mortgage than it is for a big real estate firm. But the problem is, over the last 2 years, we've seen bidding wars in the housing market. With such low inventory, there would sometimes be 100+ offers on a single home. A lot of those offers are going to be well over asking price, meaning that houses were starting to sell for $10,000, $20,000, $30,000, $40,000, and even $50,000 above asking. Americans really wanted a home, and they were willing to do what they had to in order to get it. And the banks were very lenient on that. They pushed Americans to the edge of their budget because they said, hey, if you want to get a home, that's the price you pay. And then they said, but you're saving money because interest rates right now are so low. So even if you do have to pay an extra $30,000 for that home, you're still going to end up paying the same amount that you normally would. So it's not a big deal. Of course, banks would say that for the obvious reasons. They want to make money. They make money off of these loans, and then they package them and sell them as mortgage-backed securities on the stock market. But real estate investment firms have been entering bidding wars too. And guess what? Many Americans cannot outbid a real estate investment firm. That means if a real estate investment firm wanted to buy the house that you were interested, guess what? They were gonna get it. Meaning there's fewer supply for everyday Americans, and then they have to turn to other things, like renting or moving in with a friend. That means that housing prices have gone even higher for everyday Americans, and they're not able to afford homes anymore. But the housing market remains hot because there are some individuals who are able to, like real estate investors, firms, and wealthy Americans. I mean, there's always gonna be some type of demand in the housing market. If there's houses on the market for sale, then there's gonna be someone out there that wants to buy it. That's pushing housing prices up even more. And of course, this is not going to be true for every single market. In some markets, buyer demand is still extremely hot. And in other markets, buyer demand is getting colder. Again, it's going to depend on your particular area here. So don't think this is just an umbrella for everything that's happening in the United States right now. I want to mention too about these real estate investment firms is this cannot continue forever. What is the purpose of a real estate investment firm buying a property? They want to make money. How does a real estate investment firm and a real estate investor make money on a property? Well, there's two ways. They can fix it up and they can flip it. Now, that's not really real estate investing because you're doing a lot of active work and putting so much money into a property that I wouldn't really consider it real estate investing. Or you can simply rent the property out. You, as the real estate investor, are the owner of that property. And if somebody wants to live there, then they can move in. They are now your tenant and they pay you rent. The rent is usually a little bit more than what the mortgage is, so that way you can cover extra costs if they rise. But here's the thing you gotta remember. rents and mortgage prices are going up in the United States. So a real estate investor has to now set the price of their rent at whatever they can to actually make a profit. For instance, if a real estate investor buys a house and they set the rent way too high, then nobody is going to want to live in that house, and then they have to be stuck with a mortgage that they're unable to pay. So the real estate investor and the firm now has to kind of decide what is the market value for that home. They're not going to be able to raise the rent way too quickly because nobody's going to be able to afford it. And the other thing too, as far as these real estate investment firms go, they want to make a profit on these properties. So even if they buy a home with the full intent to sell it later, well, they have to sell it for what the market value is going to be. They can't just decide that they're going to raise the price through the roof just because the housing market is hot. Nobody's going to be able to buy that home other than another firm, which is kind of useless at that point. This could be really bad for real estate companies too, because interest rates are starting to go up. Yes, they get a lower interest rate because they have a lot more assets and they're a lot less risky to banks. But if interest rates continue to rise continuously, well, it might not make sense for them to invest in properties either. Remember, they have to find somebody to live in that house, whether they're selling it or renting it out. If nobody's willing to buy that home or rent it out, they have to bring their prices down too. And if this starts to come in mass, then it's not going to make sense for these companies to continue to pour money into real estate. So they have to be extremely careful here. I believe that real estate companies and real estate investors are going to continue to purchase houses in the United States, but the prices aren't really going to be that much crazier than what you're going to pay from an average seller. They're going to be about the same because they have to be. So with that said, what exactly is coming for the housing market next? Are we going to see a crash in the near to distant future? Well, in order to have a crash in the housing market, a few different things have to happen. For one, demand needs to rapidly decrease in the United States, almost to a near record low. At the same time, though, you need to have inventory rise very quickly, almost to a record high. And then once those two things happen, you'd think then demand would start to rise because supply is rising too. Well, in order to see a full-on crash, demand has to continue to go lower, and supply has to continue to get higher. This is a slight possibility because with interest rates starting to rise and the Federal Reserve saying they want to get aggressive with inflation, we could see interest rates go past 10% in the United States, meaning mortgages could get way too high for everyday Americans, and just about nobody is going to be able to buy a home. And if we start to see inflation continue to get worse in the US, then yeah, Americans' budgets are going to be so restricted that nobody is going to be able to purchase a home anymore. So that's a possibility. It's unlikely right now that that's going to happen because I don't think the Federal Reserve is going to get nearly aggressive enough. And I think eventually as supply chain issues go away and demand does decrease a little bit, inflation will start to lower. But this process is going to take a long time, and wages also need to come up in the US. What I think we're going to see in the United States is the housing market slowly come back down. I think that the market is going to be red hot for the next few months, but by midsummer 2022, I think we're going to start to see housing prices dramatically start to decrease. It's going to take a while for inventory to improve though. Some estimates are saying that inventory isn't going to hit normal levels again until around the mid parts of 2023 or 2024. Some experts and estimates are now saying though that inventory isn't going to reach normal levels, so around 1.5 million units available in the United States every month until the mid parts of 2023 or sometime in 2024. So even though prices are most likely going to come down because demand is lowering because of the high prices and high interest rates, but also because there's more houses coming on the market. And you got to think, why did we see the housing market crash in 2007 and 2008? Well, this is because many Americans went into foreclosure because they couldn't afford their homes anymore. Banks were giving out ninja loans, no income, no assets, and no job loans. You didn't need anything, and you didn't need to prove that you could pay off your $100,000 plus loan to the bank before you got one. All you needed to do was say that you needed a home because a home was the American dream. Everybody wants a home in the United States, so banks and financial institutions made it easy. Today though, there are so many different checks and balances in place to ensure that that situation never happens again. I mean, I bought a home in the early parts of 2020, and yeah, there were so many hoops that I and my wife had to go through. It wasn't easy, and it took months in order to get a mortgage. So I firmly believe that that's not a big worry for the future. Now, I do want to add one little asterisk or caveat to that. Inflation is going up, and if it continues to do so, that's going to eat into Americans' budgets, and they might not be able to afford their home anymore. That assumes, though, that inflation continues to go up and wages don't really rise in the United States. Both of those two things I don't think are going to happen in the long term. So yeah, for the most part, everybody that has a mortgage in the United States right now is able to afford it. It might be pushing their budget all the way to the edge so they can't do things like build wealth and invest, but they're technically able to afford their house. That's going to mean that the housing market cruises. We're not going to see a full-on crash. But hey, to be completely honest with you, anything can happen in this economy right now. I am not a fortune teller. I don't have a crystal ball, and I can't tell you exactly what is going to happen with the United States economy and the housing market in the future. All I can do is look at the facts and figures and the news that is coming out today. And right now, based on what I'm looking at, the housing market is not going to crash. Now, of course, that could change. We could have a lot of crazy factors enter the housing market and affect it over the next few months. Right now, housing prices are going to continue to go up, inventory is going to continue to go down, but demand is also going to start dropping. That's going to lead to appreciation slowing down in the housing market and eventually prices slowly starting to decrease. Not enough to cause a full-on crash though, as there are still some wealthy buyers and real estate investment firms able to purchase houses all throughout the country. But now I want to hear from you on this issue. What do you think about the housing market in 2022? Do you think we're going to see a full-on crash because interest rates are getting too high and prices are getting way too high? Or do you think that the housing market is just going to cruise for the rest of the year? We're not going to see an outright crash, just a slow drop in the market. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.